Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Vancouver-based realtor Steve Saretsky. You can find him online at stevesaretsky.com. Welcome back to the show, Steve.
Always a pleasure. Thanks for having me on.
Are banks continuing to be conservative in their mortgage lending?
I don't know if I'd say conservative. I think that they've certainly been tighter, more tighter than we were in sort of 15, 16, 17. But I think that, from what I'm gauging, feet on the ground with the markets, and speaking with a lot of the mortgage brokers that are doing a lot of volume, is that, I think they've sort of digested, or everyone's sort of become accustomed to the mortgage stress test, and it seems to me like the credit is still definitely flowing. I don't think there's any shortage of mortgage credit out there, and we can see that in the Bank of Canada data. Is we have seen an uptick in not only year-over-year growth in residential mortgage credit, but we've also seen 3-month annualized growth has ticked up as well. Again, now that's coming off basically 20-year lows, so it shouldn't be a surprise that it is rising. But I think that for the most part, given that rates are still low, the housing market, outside of maybe Vancouver, is relatively stable, across Canada. And so I think that the banks are still confident enough that they're happy lending, and so I think that the credit is still flowing, in my opinion.
Do people renewing their mortgages have to face that stress test?
Yeah, so if you're renewing if you're renewing your mortgage, you don't have to get stress tested. It's when you go to renew and you want to sort of evaluate your options. So you say your RBC, well, I want to go to Scotiabank. Well, if you're going to change lenders, then you have to go through the stress test, and I know that that's been a big pushback from the mortgage broker space, and I think that they certainly make a valid argument that, I think it gives banks the upper hand to sort of keep you locked in with them, and then obviously, they don't have to be as competitive with the interest rates. So I think that it kind of puts the consumer at a bit of a disadvantage.
Do you think that provision should be removed?
Yeah, I think so. I think it should definitely be looked at, because I think that people should have flexibility, right? I think that, I know that, rumor has it again, that, that was kind of one of the banks to sort of agree with the, B20 mortgage stress test. One of the provisions I know that they're lobbying for is that they wanted that policy in place, so they could sort of keep customers locked in. And so I think that generally speaking, if the banks are pushing for it, it's probably for the bank's best interest and not the consumer's best interest.
Are construction insolvencies a canary in the coal mine for the housing market?
I think it's definitely like a lagging indicator. I think people running businesses in general try to sort of string things out as long as possible and try to find means, to keep the lights on. So if we look at Canadian construction company or insolvencies, those are starting to increase, but off a very, very low base. So definitely nothing to be alarmed or concerned about. I would say that overall, in general, construction insolvencies in Canada are still actually very, very low. But we're starting to see it, and I think some of the stress is coming for single-family home builders and single-family contractors, people that sort of play in that space. Particularly here in Vancouver, is because that segment of the market has been so soft over the last 2 years. You're not seeing very many new projects start, and you're seeing single-family housing starts across Greater Vancouver have dropped off significantly, and I suspect that will likely to continue as the market here, at least for the single-family market, is still very soft.
Isn't one of the solutions to affordable housing to build more housing?
Yeah, I think so, and I think it should be encouraged. I mean, I don't think that building more single-family housing is going to sort of move the needle. I think that when you look at the cost of land, let's just say, in general, throughout large parts of Greater Vancouver, you're going to be, about $1 million for a parcel of land, and the time you build a house on there, you're in it for 1.5, 1.6. So, I think that's been another driver of why single-family housing starts have dropped off, is because it's switched back to this local market. And at the end of the day, is based on where the incomes are at. A lot of people can't afford single-family housing, and so we're seeing more and more, obviously, densification, apartment construction, townhouses, and I think that that's likely to continue to be the trend, regardless of if we have a further correction in the housing market here. I think that sort of the days of the single-family house, I think, are narrowing.
We'll have more with Steve Saretsky right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Welcome back. We're speaking with Steve Saretsky. Steve, how popular are home equity lines of credit in Canada? HELOCs.
Well, I think that they've gotten a lot of media attention, and I've certainly talked to it over the last couple of years, because I think everybody knows the amazing housing boom that we've had really for going on over 2 decades now in Canada. And, through that, it sort of created this, wealth effect where essentially people are able to basically, they're wealthier through the rising asset price, but also your ability to tap into that equity also helps spur consumer spending. And so that's why we have record high house prices. We have record high levels of household indebtedness. And basically people are fueling their consumption through their home equity. And so they're tapping that home equity through home equity lines of credit, or you tap that through, refinancing your home and extracting some cash out in that facet. So if you actually look at it, the Bank of Canada just came out with a study, kind of interesting. You can kind of see, this shouldn't be news to anybody, but obviously the correlation between rising home prices and, the growth in household spending kind of go hand in hand. But home equity extraction, basically people pulling money out of their house, peaked in 2017 at $89 billion for the year. $89 billion, that's per the Bank of Canada. So 2017, I think you could argue, at least in the majority of markets in Canada, I would argue nationally, that the market really peaked out here in 2017. Since then, it's kind of been moving sideways. And so that's when we had our record home equity extraction.
Can a home equity line of credit be a risky product to own in a real estate downturn?
Well, a home equity line is technically a callable loan, so certainly the bank can ask for their money back. I don't really think that's going to be the case. I think that's kind of like your ultimate doomsday scenario where banks are starting to go under and they need to ask for those back. So that's kind of your doomsday scenario. I think for the most part is, they can sort of change terms on you. Rates can fluctuate. They can certainly try to scale back the maximum amount that they're going to loan to you. So there's various ways that the bank can sort of change the payments and the term structure on these callable loans.
When you renew your mortgage, does the bank look at how much you owe on your home equity loan when they renew the mortgage, and so they want you to pay it all off at once? I
believe they'll all look at that. That's probably a better question for a mortgage broker than myself, but certainly taken all your, all your debt into consideration in terms of debt servicing payments, and renewing your home and et cetera. So, I know it is, but, there's a lot of programs that are set up here in Canada, especially a lot of the big banks that are basically set up, to basically tap into your home equity. And so there's a lot of programs out there that sort of allow you this feature, and it's certainly been encouraged. And we can see that again, obviously, through consumer spending, household debt, and then obviously record low savings rates as people aren't saving money. They're basically just extracting the equity out of their house and using that to sort of fund their lifestyle, fund renovations in the house, use that equity to then roll it into another purchase, an investment property. So it's been a very, very popular mechanism in Canada.
If one were to, I don't know if this is the right term, use their home equity right, should they not use it to invest in something that should pay you back more than what you owe on your mortgage?
Yeah, I think that I think certainly the more financially literate group of individuals that are using home equities, I think that are using it for the right purposes, and they're going to use it to invest, right? So obviously there's a time and a place to do that, but you tap your home equity as an example. You tap your home equity at 4%, and you throw it in the market, whether that's the stock market or whatever, and try to get your 10% return. Obviously, there's the timing of that is everything too, right? I mean, if you're putting it in right now, sort of late cycle, 10 years into an expansion as the economy is slowing down, probably not the best time to be sort of leveraging, and going long in that aspect, but certainly there's people doing that. I mean, I know that what's popular here in Canada is, a lot of, people that have built up substantial amount of money in their home. They'll tap their home equity at 4%. They'll then turn around, take that money and invest it with a mortgage investment corporation here in Canada, which basically lends against real estate. And they're, over the last 10 years, they've been spitting out about an 8% annual return. And so people say, okay, well, I'm taking that 4% spread. But again, those sort of investments, although they have been very lucrative and they've done well, they're certainly not risk-free. Again, particularly sort of where we are in this cycle, I think that there's certainly, you'd probably want to hedge some of that downside. But again, I think everybody sort of makes their decisions.
We'll have more with Steve Saretsky right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretsky. Steve, Conservative leader Andrew Scheer is promising to extend mortgage amortizations to 30 years and, quote, fix the stress test, unquote. Would this cause banks to tighten lending even more?
I don't think it would tighten lending. I think it would probably do the reverse. I think that at the end of the day, it's sort of about momentum and confidence and sentiment in the housing market. So by extending amortizations, you're arguably just creating additional demand in the housing market. You're really just pulling demand forward. You are going to essentially lower the monthly payments of a borrower, but that's generally just going to create, again, more demand, so it ultimately just creates more expensive housing. I mean, if you think about it, I think someone gave this example, last week. I mean, you could hypothetically extend amortizations to 100 years. I mean, that would significantly lower the payments, and probably everyone will be able to afford a house. But it wouldn't really solve the price issue, which is that prices would obviously rise because you'd have that many more people bidding for real estate, particularly in these supply-constrained cities. So extending the amortization to 30 years, although I think that they paint it as this kind gesture to help first-time buyers, it's really just a gift to the real estate industry. And so, if that helps sort of push prices up a bit. I think that would obviously just encourage more investment and capital into the real estate sector, right? So more development, probably more lending into that space. And so we're going to continue to sort of keep this 20-year housing bull market propped up. If that's the goal of the conservative government, then, that is what it is. So yeah, I kind of look at that. I don't know in terms of what he means by quote unquote fixing the stress test. I think the only thing that needs to be fixed is the stress test on renewals. That doesn't probably make a whole lot of sense, but I think he was pretty vague, truthfully, in his statements that I read, in terms of how he would fix the stress test. I think that, given it's election year, I think that everyone's sort of out there making promises with really no concrete, plans or steps to actually go ahead and implement these things. So I'm kind of curious to see, obviously, who gets elected. We know that Trudeau has also brought in policies that I would argue could potentially be stimulative, increasing the leverage for first-time home buyers in Vancouver, Toronto, and Victoria. Extending that to a scenario where they're saying, okay, if you're a first-time home buyer, you can borrow up to $700,000. I think it was $788,000. So I think the fact that you have, you're encouraging almost first-time home buyers that $800,000, should be your sort of entry-level product, I think is kind of a head-scratcher in its own aspect. I mean, the reason why we have $800,000 entry-level homes to begin with is because of, continued government subsidy into the real estate sector.
Steve, has anybody said during the election campaign that caught your eye that said, hey, this will make homes more affordable and will make good economic sense for the nation?
I mean, truthfully, the only way to make housing more affordable is to sort of take some of the pain and really ultimately has to restrict credit, which is, you're kind of restricting demand, and then obviously incentivizing more and more development. So, but it's kind of a two-way street, because at the end of the day, developers will build when credit is flowing and when people are buying homes. So they'll sort of increase the supply, and when credit contracts, people don't buy it, they don't increase the supply, but then the prices come down and it makes land more affordable. So I don't know. I'm not a huge fan of government sort of intervening in sort of, free markets and interfering with natural market cycles. I think that real estate, if you leave it to its be, it will go through cycles. It will go up, it will go down. It's been documented for hundreds of years. So, I think that we continue to sort of interfere with this, and it's creating all these strange discrepancies, across Canada.
Steve, thank you so much for chatting with us.
My pleasure. Thanks for having me on.
My guest has been Steve Saretsky, a Vancouver-based realtor who you can find online at stevesaretsky.com. If you have any questions for Steve or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet. Our popular YouTube channel is Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.